Hello everyone, this is Preethi Channabasappa from Vishnu IAS. Today I am going to discuss with you all guys a very important topic, that is bond yield and bond price. These topics we used to see in newspaper. They used to mention the bond yield and bond price, but we don't know actually what is the meaning of bond yield and bond price. Let me explain to you first that what is bond. Bond is just a paper which is a debt paper. It's a debt instrument. Anything to be called a bond, it has to have a face value, a interest rate and maturity period. All these things, that is face value, interest rate and maturity period, are mentioned in this paper. This is called debt instrument. Suppose a investor wants to invest but he doesn't have a money, then he will give this type of papers to a person, any person. Say for example, A wants to invest, B has money. So A will give a bond to B and B will get a money. Upon maturity, B will get money back with interest from A. So this is called bond. Then bond yield and bond price. Bond yield and bond price. For example, let me explain to you first bond yield. I will explain this concept with you with an example. Say for example, a bond is there. Its face value is 10,000. Actually in reality, it can be more or less, but let us take for example 10,000 and interest rate 10% and has a maturity period of 10 years. So this fulfilling all the feature of bond. It can be called bond. So after 1 year, how much interest a person A will get, means that is 10% of 10,000 is 1,000 rupees. So this 1,000 rupees is called bond yield. This 10,000 rupees is called bond yield. So this interest rate which converted into money after 1 year is called bond yield. Then comes bond price. Bond price is, suppose person A wants to sell that bond, I want immediate money. So he will sell after 1 year after getting 1,000 rupees as bond yield. So say for example, he will go to secondary market. Actually secondary market will not be like this kind, it will be entirely different, because its money will depends on the supply and demand of the bonds. So say for example, on the day he is selling, he gets to rupees 9,000. He will sell the bond for 9,000, which has the 10,000 rupees bond face value. So the B will get. So this change in the price from 10,000 to 9,000, this is the change in the bond price. This is called bond price. Bond price tend to increase based on the supply and demand in the market, in the secondary market. Usually what will happen in the real market, these bonds what we are talking about is government security bonds usually, because they are highly secure bonds, because the risk of losing the money will be less, because after maturity 10 years they will definitely get a money. The investors will definitely get a money. So the government security is also a kind of bond. But in reality what will happen, these things will happen in a fractions. Like in fractions so many bonds will sell, and usually this happen for a speculation. Speculation means person A can buy the bonds when the market price is less, and he know the market system very well, and he will sell the market when he gets a more face value. So he will do speculation. So the capital market, what we call share market, will work like this. So there are so many things related to this, like bond price and bond yield are related to the interest rate also. But as of now, let's understand only what is bond yield. Bond yield is the interest rate upon face value of the bond, and bond price is a change in the price of a bond, face value of a bond upon a year, or when he wants to sell the bond. Then comes what is the relationship between the bond yield and bond price. Bond yield is inversely proportional to bond price. When bond price, say for example, from 10,000 to, for 10,000 you used to get 1,000 rupees. For 9,000 he will get 900 rupees. So this will inversely proportional to each other. So this is how bond yield and bond price tend to vary in a market. So there are so many concepts related to it. We will discuss those topics in the coming videos. Thank you for watching.